understand what the HNI fraternity in the market has been doing, and who better than Vinay Khattar, Head Investment Research at Edelweiss Financial Services, joining us on the show right now. Vinay, hi, morning, good to chat with you. Tell us about the mood across the HNI category of investors. Are they trying or at least gearing back to come back to the mid and the small cap world, or do you think they're still keeping their hands aloof?
Hi, morning to you viewers. So broadly at this point in time, HNIs are generally off the market, so that we don't find very aggressive kind of buying happening or bottom fishing happening at this stage. If I were to broadly bring out the trend that has played out in last few months, so we saw significant amount of deleveraging and selling play out in the months of January, February, and that has kind of continued right through March and now. People are moving away from mid caps and small caps. They're consolidating into the large caps. A lot of shorter term portfolios and trading bets are getting liquidated, and the money is moving into long-term investments for some of these investors. And at this particular point in time, activity levels continue to remain reasonably low. And as I said earlier, the bottom fishing is not started yet at this point in time.
When would it start, to your mind?
So it's early to say, Tanveer. Our broad sense is that we should begin to see some degree of relief rally to pick up on mid caps. But then again, it's just likely to be a relief rally. Is it a trend change? Not yet, too early to say. And if you were to just look at last 20-25 years of data, in fact, the BSE mid-cap indices and all got introduced close to 2002. So we were just examining data for last 16-18 years. As per historical data, two facts emerge clearly. One, in a pre-election years, Nifty normally tends to rally. Market tends to rally by about 18 to 20% every time in last 4 or 5 elections in 12 months preceding the election year. And it's not just that it's in line with a global phenomena. Nifty, in fact, during these periods has beaten the global indices or global markets by anywhere between 7 to 10%. So it's an India-specific phenomena that every time there are elections in 12 months preceding, Nifty tends to outperform and does very well. This time also we are expecting that to happen, which then collaborates with the other thought that mid-caps are likely to remain underperformers for probably 12 to 18 months, so to speak. Now, is it a clear no-go area? My sense is no. While Sensex or the large caps will outperform, it is not that mid caps will do very, very badly. There is a lot of value beginning to emerge in mid caps and small cap. Your growth will be very good. Our sense is that even this quarter the numbers should be quite good. And as Modi government heads for elections, they are going to reinflate the economy. If you look at last 3-4 years, there has been a very strong disinflationary trend by controlling MSP, by controlling agri exports, and host of other factors where inflation has been brought under control with a heavy hand. I think some degree of reversal is likely to play out in months preceding election. We see that MSP hikes are happening, fuel prices are anyway up. So as the economy reinflates, a lot of corporates are going to report better and better numbers. We are finding consumption picking up on the rural side that will percolate to the urban side. And overall, the entire consumption will feed into the economic activity. So mid-caps should come back vigorously, maybe over 12 to 18 months period. But the time to pick them is now when the value is beginning to emerge.
Where do you see that value emerge? Considering you've always talked about the significant activity which one has seen around HAM projects in FY17 as well as FY18, the fact that competitive intensity in these kind of projects as well is very low. And to top it all, the stocks have corrected quite a fair bit in the recent carnage which played out in the broader markets.
You're very right on that one. So construction space is one space where we find that price correction has been very, very severe. And let me just list out some of the concerns which market is thinking about. And one of the core one is that financial closures for a lot of these HAM projects will not happen. That means companies like DILIP, BUILDCON, which have got almost 11 HAM projects which need financial closure, out of which just three have happened, are going to face problems. Sadbhav is going to face problems. And a lot of these stocks are down 30-40%. Now, let me just take you a bit back into the history to understand the current context. This was a similar commentary just 2.5 years ago in 2015-16. Modi government was 12 months into the harness. They had cracked the new model of getting HAM in, and what was out of the window. And market was unwilling to give valuation to any of these new kids on the block like DILIP, Sadbhav, Ashoka, and the stocks were trading very, very cheap. And again, the thought was that bankers will not fund this model. There are huge amount of concerns. Each of those concerns got resolved, and by mid-2017, you had 42 HAM financial closures happening. I think in 2018, some of those concerns which are being branded are likely to meet the same fate. The financial closure is, for a lot of these projects will happen. It may not happen at the same pricing as what it would have happened maybe 6 months ago. The pricing is going to be higher, which means that companies would take a hit on the profitability and equity IRRs to a certain extent. But will the FCs not happen? That's not our concern at this juncture. There's another context to this whole argument. Road building has been one of the star shows for Modi government. They have put in a lot of effort to get road construction to the stage at which it currently is. Now, Bharatmala is likely to come up for bidding over next 6 to 9 or 12 months, Bharatmala projects. Our sense is total bidding worth 70,000 crore may happen, out of which 40,000 crore is going to be HAM in next 6 to 9 months. If the FCs for the existing projects don't happen, there is no way that any bidding is going to happen for the fresh project pipeline. This will be a big hit for the Modi government, and I don't think government will allow that to happen. So my sense is a lot of these concerns are overdone. There is value beginning to emerge for some of these stocks. And if investors have 2 to 3 years as an investment time horizon, these could be very, very interesting bets after the current storm passes away.
Vinay, did your perception for IT change? Is it really TCS versus the others? Or do you think INFOSYS in its commentary has been conservative in indicating that things are actually looking up for the entire space and the rupee gives a helping hand?
So things are looking up for the entire space. Look at the entire mid-cap IT pack. That's been one of the packs where we have been kind of bullish, and a lot of these stocks like Hexaware and all keep on making new highs. TCS has of course been on a tear. The stock has, from its lows, has given almost 60% return. Y2D year to date it is close to about 40%. So for a mega cap like TCS, giving this kind of a return is completely amazing. Now, two factors. One, the US demand pickup clearly appears to be on the horizon. It is in no small way aided by massive tax cuts and rejuvenation in the American economy. And the BFSI numbers, where a lot of Indian IT guys have exposure, are beginning to improve. And TCS, of course, continues to perform on multiple tracks, including very significant growth on the digital side, almost 35-40% sustainable now for 3, 4, 5 quarters, and that's becoming a bigger and bigger part of their book. Now, coming specifically to INFOSYS, if you were to look at the recent past, the whole noise around the management changes, they are not able to fix their CEO, right? And the headwinds have been there. If you look at the kind of market cap generation that TCS has done versus INFOSYS in the recent past, there is no comparison at all. And the growth numbers also point in the same direction. Our sense is that till the time you don't find a leader who will give new direction and new shape to things at INFOSYS, the numbers will continue to remain subdued vis-a-vis competition. Even if TCS outperforms because of the scenario in US as well as aided by the rupee, INFOSYS may do reasonable, but will it catch up? Will the discounts on the valuations go away? Our sense is no at this point in time.
Prima facie, Vinay, what is it that you're sensing about the HNI community? Is there a clear aversion to small and mid caps right now, and are they just completely concentrating on large caps? You said that they're away from the market right now, not really allocating fresh capital, but typically on an average, what are the kind of cash levels that they're still sitting on?
So our sense is that leverage has come down very, very significantly. There are people who could be sitting on anywhere between 20, 30, 40% kind of cash. And some of the investors that we speak to are probably have not sat on this kind of cash for many, many years. So there is a risk aversion clearly. And it's in no small way aided by the macro deterioration, very high oil prices, interest rates being high in US and inching upwards, interest rates inching upwards in India, inflation being high. So the macro has caused some degree of risk aversion to happen, and people have reduced leverage considerably. A lot of other people have gone into cash to the levels that they would not have been in last many, many years. And because of this risk aversion, there is a general tendency not to participate in the mid caps and small cap. If I were to just break down the large cap and mid cap across sectors, you have large caps in the same sector trading at significantly high valuation as compared to mid caps and small caps. Most of the damage has happened only in mid caps and small caps. The large caps have generally fared well, though Nifty may not be really a right representation for that. If I were to just break down the Nifty, out of the top 50 stocks, 15 stocks have given almost 23-24% kind of a return, and the rest of the 35 stocks have fared not as well as what it appears to be. So even within the large caps and even within the Nifty, we find that there are shades of grey which are playing out. But within large cap and mid caps, the divergence is huge. The kind of bloodbath that we have seen on mid caps and small cap has probably not been seen in a long while. We did an examination of about 850 actively traded mid caps and small cap stocks. Almost 85% of these 850 stocks are down more than 20%. So that's a pretty strong statement and a pretty vicious correction that has played out in last 5 or 6 months on mid caps and small cap. And you find that HNI risk aversion to this particular segment has been intense.
It has been, and what's been really encouraging is to see that, you know, they are finding favor in large caps in this sort of market environment, and you know, activity is building up slowly in that direction. But Vinay, it's great to have you on the show. Thanks very much for taking out the time to share your perspective with us. We really value your opinion.